Hello everyone, welcome to my channel. Well, NVIDIA didn't triple its sales this quarter from the previous quarter. The law of large numbers finally caught up to it. But the good news is that it did not drag the rest of the market down. In fact, this market is rotating into more cyclical and smaller stocks right now, especially the cyclicals. And who is the grandest investor in cyclical stocks? That would be none other than Warren Buffett. He owns banks, insurance companies, railroad companies, Dairy Queen, See's Candies. He owns these stocks, some of which he's owned for years, like Coke especially. He owns American Express. He still owns a large amount of Apple, although he sold half of his Apple shares, and now he owns 20% of his shares. His stock shares are Apple shares. So it's a little bit of technology thrown in with basic cyclical stocks that are benefiting strongly from the current environment. And on Thursday, I pivoted away from technology and went into Berkshire Hathaway. I bought 2,000 shares of Berkshire Hathaway, the BRKB shares, not the A shares. Those are over $700,000 apiece. And what a life Buffett has lived. At age 94, he is the leader of the only stock, non-technology stock, the only non-technology stock that is worth now over $1 trillion, and it looks to go higher. As much as Buffett likes to find stocks and hold on to them, he also has a history of trading those stocks, which is something I like to do. I like to follow a stock for a period of time anyway, at least while it's hot, and trade in and out of it depending on conditions. And to a degree, he does that with certain stocks. Most notably right now, Buffett dumps B of A stock again, and soon he may trade in secret. Warren Buffett's Berkshire Hathaway won't have to swiftly disclose its rapid-fire sales of Bank America Corporation stock too much longer. That is, if he keeps whittling the investment. A fresh round of disposals disclosed late Friday trimmed the conglomerate stake in the bank down to 11.4%. So as long as he holds more than 10%, U.S. rules require it to reveal transactions within a few days. But if the company holds less than 10%, it may wait weeks to update the public, typically giving snapshots after every quarter. Looking at the one-month chart of Berkshire Hathaway, you can see that it's gone up from about 440 to 475. I bought it on Thursday after hearing NVIDIA's results. I decided I had to get some cyclical stocks, some rotating stocks, the type of stocks that Berkshire Hathaway owns. And so I bought 2,000 shares at about $467. So I think it's going to continue to go up as long as we do not go into a recession. And the next indicator of whether we're going into a recession will be next Friday, September 6th, when we get the employment numbers. They are calling this a once-in-a-lifetime Wall Street rally, which raises soft landing stakes. Dovish Fed helps markets bounce back from early August rout. Data on jobs, manufacturing will test faith of economic bulls. It began badly, but 4 weeks on from the worst volatility blow-up since the pandemic, August will go down as another grand gesture of confidence by Wall Street in its ability to suss out the future. Levels of conviction are soaring across assets. In one example, exchange-traded funds tracking government debt, corporate credit, and equities have now risen in unison for 4 straight months. It's the longest stretch of correlated gains since at least 2007, up 25% in the past 12 months. The S&P 500 has never climbed this much in the run-up to the first interest rate cut of an easing cycle, 7 decades of data compiled by Ned Davis Research and Bloomberg show. Traders are leaning into bets with zeal as serious questions linger about the economy and inflation, and how central bankers will respond. Before the Federal Reserve has even begun to act, bond markets have priced in a slew of rate cuts. Measures of default risk are falling, and surging equities reflect sure-thing bets the economy will boom. Gains of 2.3% for the S&P 500 in August, 1.8% for an EFT tracking long-dated treasuries, and 1.5% for investment-grade bonds all amount to a big show of force by cross-asset bulls who are convinced Fed Chair Powell will cut rates into a healthy economy. All told, the wagers are at the mercy of how economic data, capricious of late, plays out on the cusp of the central bank's meeting on September 18th. What's amazing is the last half hour of trading was absolutely wild, particularly the last 10 minutes. The S&P 500 spiked in the last 10 minutes of U.S. tradings. The Fed favored inflation gauge's mild gains set stage for easing. U.S. consumer sentiment rises for the first time in 5 months. Stocks climbed in the final stretch of a wild August, with traders bracing for what's historically known as the worst month for equities. For all the whiplash in global markets just a few weeks ago, the S&P 500 closed within a whisker of its all-time highs. Equities spiked in the last 10 minutes of Wall Street trading, with the S&P 500 up 1% and all of its major groups on the rise. The gauge notched its 4th straight monthly gain, amid data showing the economy is holding up while leaving the door open for the Federal Reserve to start cutting rates in September. Whether a jumbo-sized reduction remains on the table, next week's jobs report might bring some clues. That is the vital thing. If it goes up to 4.4%, they'll do a full half-point cut. Poor NVIDIA reported earnings after the market on Wednesday, and it was severely punished for not delivering the blowout quarter that investors have come to respect. NVIDIA tumbles after disappointing forecasts. Blackwell chip snags. Companies' investors have grown accustomed to blowout quarters. NVIDIA says it's ironing out production issues with the new chips. NVIDIA Corporation failed to live up to investor hopes with its latest results on Wednesday, delivering an underwhelming forecast and news of production snags with its much-awaited Blackwell chips. The company's quarterly report, the most anticipated part of the tech industry's earnings season, met or beat analyst estimates on nearly every measure. But NVIDIA investors have grown accustomed to blowout quarters, and the latest numbers didn't qualify. So the one-week chart on NVIDIA tells the story. It's down about almost 8% for the week, and it was above 125 until it reported earnings, and then it finished the week, at 119, and it could have been worse. But again, these were positive earnings. It's just it wasn't the blowout quarter. So I think we're going to get used to NVIDIA returning like 40, 50% a year, maybe 20, 30% a year, instead of expecting over 100% per year returns, which is just wild. And in the last month, as you can see from this chart of the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, you can see, it's been a reasonable month, surprisingly. The best one has been the Dow Jones Industrial Average, and that's because it has the cyclical stocks. In second place is the S&P 500, and in last place is the NASDAQ, which is unusual because it's led the way so much in so many ways this year. but you got 3.4% on the Dow Jones Industrials. That's very decent, and even the 2% on the Nasdaq is good. On a yearly basis, that's 24%. So we really have nothing to complain about. It's just surprising that the rotation is actually occurring. And is it occurring because of the anticipated interest rate cuts? Well, Tom Lee would say so. The Dow Jones Industrial Average relative strength is 67, which I think indicates there's probably more to come. NVIDIA's earnings report shows the problem of being priced for perfection. NVIDIA reported better than average results on Wednesday and issued optimistic revenue guidance, but the gross margin showed slight slippage. The stock, up almost ninefold since the end of 2022, slid in extended trading. Revenue increased 122% from a year earlier, topping estimates of 113% growth. And there was good news on inflation. The Fed's favorite inflation indicator increased 0.2% in July as expected. Core personal consumption expenditures prices increased 0.2% in July and 2.6% from a year ago. The 12-month figure was slightly softer than the 2.7 estimate. All item inflation came in respectively at 0.2% for the month and 2.5% for the year, in line with forecasts. Personal income increased 0.3%, slightly higher than the 0.2% estimate, while consumer spending rose 0.5%, in line with the forecast. NVIDIA even announced a $50 billion stock buyback. NVIDIA said Wednesday that its board of directors has approved a $50 billion stock buyback. The computer chip giant announced the share repurchase as part of its fiscal second quarter earnings, in which it reported earnings and guidance that surpassed Wall Street expectations. In May, Apple announced a $110 billion stock buyback as part of its fiscal second quarter results. So they tried to pump the stock a little bit. And again, it didn't crash. It just did a pullback. And I think the expectations are probably a little bit more in line. And I think it's a good stock, and I think it has a good long-range blockbuster future. But it's going to move more like the Apples and less like a speculative stock like it has been moving. This economy sure does keep you guessing, though. Walmart posts best month since 2014 as discount rivals slump. Dollar General's results disappoint, dragging down Dollar Tree. Walmart hit the sweet spot with shoppers, Jones Trading says. August was a blowout month for Walmart and a disastrous one for some of its discount chain competitors as consumers rein in spending. Shares of the Bentonville, Arkansas-based retailer surged about 13% in August, notching their best month since November 2014 and adding roughly $69 billion to the company's market capitalization. A stronger than expected second quarter earnings report fueled by price-conscious shoppers drove the advance. So quality discount stores like Walmart, like Target, like Ross stores are doing well. It's thought that stores like Walmart might be doing better because higher income people might be coming to Walmart because of the high price at the higher price stores. So it's kind of a mixed picture, but so far it looks good. This list of Buffett stocks that analysts love, there's 10 of them, and it's very interesting that the top two holdings are Apple and Amazon. And also they have T-Mobile on the list at about number 6, which I have seen recommended on technology lists. So it's interesting that he has a lot of the old style cyclical companies, but he's putting in a significant dose of very major technology companies, namely Apple and Amazon. Thanks for listening. Catch me next time. We will keep trying to keep you informed of the latest technology news, but I am branching into rotating into cyclical stocks. I think this is a phase we're going through. I think technology stocks will return to dominate. It's just a phase we're in at this stage of the market.